Welcome, everyone, to another episode of Between Two Brokers. Today, we have a very special guest in Erin's lovely home, Bill Payne.
Hello.
He's thrilled to be here. He may or may not have been out late last night at, being a Charlestonian at a fundraiser. But Bill and I have known each other since 2005. So 17 years. He has been my number one go-to mortgage guy and is like a brother, like a family member to me. So anytime I need life advice, I go talk to Bill. And Bill, will you intro yourself and say who you're with and what you do? And then we need to get into what is happening with interest rates.
That sounds great. My name's Bill Payne. I was born in Virginia, grew up in Alabama, came to Charleston in 2004 before it all exploded.
Yeah.
And I work with First Home Mortgage, which is based out of Maryland, and I'm a mortgage banker.
Yes.
So I know mortgages and a little about real estate.
Yes.
Just a little.
So all we have been hearing about is like what's going to happen to the housing market. Is there a bubble? When is everything going to crash? Why don't we just like start with some of that, kind of whatever you want to cover. And then I know Erin's got a long list of questions and we'll kind of get into it.
Okay. So let me, when somebody asks you, is there a bubble? What's your answer?
No. I mean, we've talked about this, Bill. So anytime I start getting hammered with questions, we try to meet up for coffee so that I can get your predictions on the economy and stuff like that. Because you read news and understand numbers and the global economy better than I do. So I say it's a supply and demand issue. So for me, I'm getting calls. And for instance, putting my house on the market, more than half of my showings were FaceTime showings. People from out of town, West Coast Canadians.
Really?
That's who's going to buy my house. A German from Canada. So international people from all over are flocking to Charleston, and there's nothing for them to buy. We can't build new homes enough to keep up with the supply. So that's how I explain it to them. And every single person that made an offer on my house is cash.
Yeah.
So it's not like interest rates are not going to affect them to some degree or affect the economy to some degree, but it's not going to affect them being able to buy a house.
Until the stock market takes a hit.
Right.
Because that's where they're all invested in.
Right.
And it is a supply-demand issue, at least here.
I was going to say, should we preface that we are talking specifically about the Charleston market?
Yes.
Because I do think that some other markets will be affected, but Charleston is really kind of insulated from some of the other problems.
I agree, and history shows that. I mean, even in 2008, we took a hit, but it wasn't near as drastic as the rest of the United States.
Yeah. Mm-hmm.
So, it's an awkward time. I think any time when you see huge losses and having to adjust how they are approaching the marketplace, that means stuff is getting weird. Mm-hmm. So the Federal Reserve is trying now to slow down inflation, yet not sink the economy, and is terribly difficult because they lost control, not over our economy, but because we become a global world, a global economy. Excuse me. They only own a segment. They can only control a segment of the piece of the puzzle. And so they're in new territory. Like, they don't have a playbook or a map to figure out how the hell to react to everything. Mm-hmm. So they're doing it on the fly, and they don't have a clue if they're doing the right or wrong thing. So we are just going to have to react and figure it out and see. And hopefully everybody keeps their cool and calm. But I don't know where this is exactly going. But we're going to be in a different spot than we were 6 months from now or 6 months ago. Definitely a different spot than we were 4 years ago, pre-pandemic. Mm-hmm. Mm-hmm. But I do feel like we're insulated here, specifically in the Charleston market from a real estate standpoint. But if there is some pain that's felt from the economy, we're going to feel it too. Mm-hmm. But there's nothing more resilient than, in my opinion, than real estate.
Yeah, because everybody needs a place to live.
Yep.
And, I think the other thing that we have to be sensitive to when we're talking about this is like the different price points. So like we can't, the luxury market and the first time home buyer market are two entirely different markets. So I think when we're kind of talking about this, we should identify those things because, it's just like now interest rates are affecting those first time home buyers that normally would be able to buy something for less. It's taking some people out of the market entirely.
Unfortunately, yeah. Mm-hmm. And there's nothing you can do about that.
Right.
Other than go live in a different area.
Right.
But things are becoming, and that's what the Federal Reserve is having to address, is like making the world affordable for all. Mm-hmm. It's an impossible mission, but they can get close to doing that. Mm-hmm. But their task is very heavy right now, and again, the fact that they have less control over it. What happens in Asia, what happens in Europe, what happens in everywhere, Canada, impacts how they have to approach things, and they have zero roadmap on how this is done.
Right.
And so far, they're making Charleston real estate unaffordable for many.
Yeah. Oh, well, that's all the people wanting to move here.
Yeah.
Where else would you want to live?
Right. So one of the biggest pushbacks I'm getting right now is because the interest rates are rising. They've gone up dramatically since even just March. And, people are like, well, they were ready to buy in February, March, but they weren't able to compete. Now they're like, oh, we're going to just sit tight and, see what happens, or sit tight and buy when prices drop. And I'm like, what are you talking about?
Yeah, I don't. So understanding that real estate, at least in my opinion, and history tells us it's resilient. Unless you have to sell in a down market, as long as you hold on to it, it's going to gain value.
Right.
And even though interest rates are high at the moment, you always have the capability or ability to refinance down the road if they drop.
Higher at the moment.
Okay,
Yes.
That's the other thing I was going to say.
Good
We
point.
need to talk about that because when I first started buying real estate in my early 20s, I was paying in the 7s.
Yeah,
So
you're right.
5% where we are
It's
now.
still historically low.
Right.
Yeah.
Right. That's very cheap money.
Yeah. But I also, what I can't seem to get people to understand is that the prices are most likely not going to go down at the end of the year. And again, we're talking about Charleston. We still have so much demand and the supply cannot keep up. And, so I think what we, in our meeting the other day, is go ahead and buy while prices are what they are. The rate of appreciation is going to slow, but that doesn't mean prices are going to go down. We obviously cannot keep appreciating at 16% per year.
Yeah.
That's what's the word? Unsustainable.
Yeah, but I think, I struggled with this with my house because I see how much my house is appreciated. And I was like, damn, if I keep it for another year, it's going to appreciate another 10%. So I would tell somebody buy today and get that appreciation and don't, you're waiting for the cheap
get it
price.
on the next property.
Exactly.
Yeah.
Yeah.
And you can always refinance once the rates go back down, but prices are not likely to go back down. And I think the reason that people are having such a hard time digesting that is because all everyone remembers is 2008. That's in our recent memory when prices really did go down.
That's fair. And it's also people get comfortable. They're used to maybe interest rates being in the 3s or 4s, or they're used to a house costing $1 million. Now it's $2 million.
Yeah.
So it's an adjustment. It's a psychological adjustment, and that's difficult for people. And I think, especially in this area, we've had such a quick or high rate of appreciation. It is a little mind-boggling, but that's not going to change. People are not going to just move away from here all at once, and then there's a huge amount of inventory. The opposite is going to continue. People are going to continue to move down here from Canada, from the Northeast, from the West Coast, from Texas, and that demand will sustain values. And as the population continues to grow, we, as the United States of America, cannot build enough homes to keep up with the demand. It is a supply-demand issue, and it is one that's not going to go away anytime soon. So that does support the value of homes. So yeah, there'll be dips, there'll be little valleys, but they're short-lived.
Right. Yeah. And the what caused the crash in 0809
That
is
was-
not at all the situation that we're in right now.
You're exactly right.
Yeah.
That was because of poor financing and banking decisions. That was because mortgages lost value. So we've actually, for once, learned from our mistakes and ensured that will not occur again.
Right.
So a 2008 crash, what caused that is not going to happen again.
Right.
We just don't know if there is something ahead of us, some little, I don't know, tough waters to sail. We don't know what's causing it, but it's going to be different than last time. And it probably isn't real estate related.
Yeah. But if you look at the historical trends of prices in the United States, like going back to the 40s and 50s, it has always gone up.
Yep.
Except for 2009. It's the only big dip.
Yep.
And so, I mean, and that we can obviously pinpoint what caused that. And again, it's not going to happen again. Back then, people were buying houses with no money down.
Correct. Which is crazy.
It's crazy.
Yeah, you
It's
got to have a
crazy.
vested interest in your home or
Exactly.
your roof above your head. In 2018, there was actually a little economic dip. It wasn't called a recession. It wasn't that severe. But that is more similar to what we may be facing
Yeah.
at this point in time, which, I mean, if I ask y'all about, y'all haven't brought that up, I don't think anybody remembers it. It was just a little, yeah,
No.
just a little thing that occurred that we don't even remember.
Nope. Sure don't. And I think, one thing that is keeping the Charleston market afloat, so to speak, or just, in high demand, I guess is a better way to say it, is that we're obviously a strong primary market, like people want to live here full time, but we also have a very strong secondary home market because of the beaches and the downtown. And so you have demand coming from both places. And the rich only got richer in COVID, and they're scooping up more houses.
Yep. Yeah. I mean, we're similar on the trajectory as like San Diego from the 90s. If you look at what happened there, this is exactly what's occurring here. And we also have a ton of beautiful people. So why would you not want to come hang out here?
Yeah, I mean, I think I, read how rising interest rates is going to affect the second home market, vacation properties.
It's the cost of carrying. So because a lot of people have there's those that have true second homes that don't rent it out. There's a larger percentage that have second homes that do rent it out, so they can offset the cost. So the cost to borrow that money, if that increases, the carrying cost does. So it will impact people that try to have second homes that also rent them out. And like the short-term rental market has thrown a lot of things into a tizzy.
Okay, talk about that, because that's like I feel like that's like the number one thing we get asked about.
What?
Besides
Like how
becoming,
can we do short-term
Can I
rentals?
be a real estate agent? People want to buy them. Yeah, people want to buy them. So talk about how that's affecting things in your world.
Well, I think what it's done is increase demand. I mean, there's, especially in this area, if you can live in Atlanta but have a second home here, but also make some money on the side by renting it, I mean, that sounds like the perfect idea. And a lot of people have done that. And so that increases demand. And so that's also pushed values up here in this area. So that's just added to the fuel.
Yeah.
It's not a bad thing, but if inflation becomes a big concern, the cost of oil, the cost of living, the cost of going to a grocery store, people are going to travel less, man. And so that will then impact the cost that you can short-term rent properties, and that'll impact the people in Atlanta that own them. So there's a trickle-down effect. And this is the scary thing. If we are heading into a recession or a little dip, it's already started. We just don't know it. We won't know it until 6 months, maybe a year later. But everybody will start to feel that financial pressure, and that's where the nervousness and those questions come from your clients of like, do we have a bubble here? What's going on?
Right.
And you can, I think all three of us can sense that everybody's a little nervous right now.
Yeah.
We just don't know why,
Yeah.
you know?
Well, but I mean, I've had people talk to me about the bubble since 2015.
Yeah.
Like every day. So I'm very used to handling the conversation. Now, I will say that I instinctively decided to get out of my big, equity position in my house. And I have no idea, and it was kind of a little bit maybe based on nervousness and uncertainty.
Or because you can. It's a great position to be in.
Yeah.
Like you said, you didn't build that house for you.
Yeah.
Yeah.
Your
I don't know.
situation changed.
Yeah.
Let's talk about the future of rates. So once inflation gets curbed,
That's a long ways away.
okay. So you don't
Years.
you don't think rates will go back down by the end of this year or next year?
As the global economy comes together, it's going to be very bumpy. But what it does mean is our interest rates, our central bank, and there are central banks in every major economy, they have to come together and kind of get on the same page. And there's a lot of politics to it. So overall, I believe everything is going to become more expensive. Interest rates have to increase. So the world of like a 2%. I mean, geez, we saw 2% rates just 2 years ago. In my mind, it just doesn't. It's not sustainable. Interest rates everything's going to have to become more costly because we're propping up not just our economy but around the world. So, which I think is fine, as long as all the major companies can pay their employees enough to afford to live here and there. So, yeah, I don't think like 7% sounds scary now, but it's not that bad.
Yeah.
Because it's borrowed money. It's not your money. So, and the government, which dictates where interest rates are, they've got to start to make some money because we've got a huge amount of debt
Yeah.
that we've got to pay off.
Yep. So other costs for homeowners that we're seeing affected by what's going on in the world today is insurance rates,
Yep.
because replacement cost is going up. I've seen a big, I was pretty good at estimating, what insurance would be, which we're not supposed to do as agents, but, I would kind of give a range as a ballpark when people would ask, but always please contact your agent. And it has changed dramatically recently.
That's a great sign of inflation. The cost to replace a house, the material, and the labor really is the scary part. And I mean, insurance is a risk. It's like going to Las Vegas. I mean, what are the odds that this home unfortunately burns down, or a hurricane comes through, or a tornado, whatever it may be? But they're playing odds. And as there's more population, more density, now, if a hurricane comes through this area, there are twice as many homes that are impacted. So what are you going to do? You've got to increase the cost of premiums. And that is a pure sign of inflation in what we're all kind of dealing, as the economy is starting to see. So I don't think that's going to get any better. The other piece that we got to figure out is FEMA. So that's a government-backed, literally the government is insuring people's homes against flood. That is unsustainable, and that's going to be really awkward to figure out, because now you got to have private companies come in and say, okay, now the United States of America is no longer backing you. You're going to have to pay this for us to come in and do that.
Yeah.
That's going to be awkward, and that's going to be costly.
Sorry, we have a wagging tail. You can come sit right here.
Hey, Bill, tell us about ribbon.
Who?
Ribbon. Like cash.
Dude, all right, so I've tried to figure out how this works. You tell me what your understanding is.
I've
of
never
it,
used it. I've never used it.
And you have a client that wants to, correct?
I have a client that has asked about it, and and so they can be cash buyers for a 1% fee. That's all I know. They can write a cash offer even though they will have to get a mortgage, but it's a 1% fee. And I don't know if it's 1% on the mortgage amount or what.
That's the sales pitch of it. So
Okay.
what's happening is somebody else is coming in and it's like you assign the contract. So John Doe's going to end up purchasing that house with cash, and your client, Jane, let's say, is going to have to pay John Doe 1% of whatever the loan amount is and fees on top of that, and then eventually purchase that property from John Doe. Mm-hmm. So there's essentially two transactions occurring right there.
Okay.
So basically, it's hard money. It's cash.
Mm-hmm. Mm-hmm.
Just
So-
helping you win a multiple offer situation,
Yeah.
but you're paying for it.
Yep.
Yeah.
Yeah. I mean, you two could be John Doe in that scenario for
Totally.
your client.
Yeah, totally. And I've thought about that. You think that's dumb?
It works until there's a dip.
Yeah.
So, there's been similar products out there over the years, but nothing as aggressive as this. From a legal standpoint, I sure as shit would never do that. I would never
Yeah.
be John Doe.
Yeah.
But, hey, if that's what it takes and somebody's willing to pay that, I mean, that's going to exist, and people are going to take advantage of it until it goes sideways, which will occur at some point. Always does. It's a gimmick.
So another way to be competitive for people who do not want to pay a 1% fee to have somebody else pay cash for them at closing that you were telling us about the other day is the option to be fully underwritten before you even make an offer.
Correct. Now, I'll ask you two, you think that'll matter?
Yes.
Yeah.
If you have if you have 3 offers that are all financing and 2 just have pre-approval letters, but one is
Okay, I'm going to tell you another thing. As a seller, I've had no apprehension, and again, y'all know that I don't worry about anything, but like I've had no apprehension about a home sale contingency if the property's under contract or if somebody's getting financing, because I haven't had a deal not close because somebody couldn't get financing that I can ever remember. Maybe one. I mean, how many hundreds? I've probably at this point sold more than 1,000 homes. And can't think of, I mean, we've definitely never had a deal that hasn't closed because of financing. So why would I even worry about that? Like, I would just take the highest offer. I mean, I get that paying cash takes the risk out of it, kinda. You know, I mean, the buyer can still pull the plug the day before closing, whether they're financed or cash. So I don't even think about. I don't know.
So why is that a trend? Like I've failed to understand why that is so important. I get it. I mean, it
Cash.
sounds sexy, but
Right.
does it really change things in the end?
No, it doesn't change things in the end. As a seller, when I've had to be like level about all of this, you know, I mean, I could care less if my client's
I
getting
think
a loan or not.
the only like term that would possibly change things is the appraisal. You know,
Which
and
everybody's striking.
yeah,
anyways.
but are they doing that understanding that they have to make up a difference because the bank is only going to loan you what the house appraised for minus
you're
your down
correct.
payment.
Yeah.
And I mean, if there's I personally have not had any appraisal problems, but I'm seeing it on like our Facebook chat pages.
Are you having it? Are you
No.
seeing it? No.
No. I mean, like 1 out of 20, maybe
Right.
it comes in under.
Right.
in an amount that the buyer can't make up.
No, they've always
Yeah.
understood they've got to make up that
Yeah.
difference. But to answer your original question, I mean, yeah, we can underwrite a buyer so that there is no credit. So we can issue a letter upon the offer that says, hey, this person is 100% good to go. There's still the unknown of if you have an appraisal, title work, and all those things. But if that really helps, hey, we can do it.
Yeah.
I'm kind of like Stacy. I'm confused as to why that. I understand the comfort of that. I don't understand why that's necessary to compete with cash buyers. But absolutely, we can do that, and we should be able to. From a mortgage standpoint, we should be doing that anyways.
It's funny because I will submit offers and just be like, I'm still waiting on the pre-approval. And some agents will be like, don't worry about it. It doesn't mean shit to me anyway. Because you can get a
Dude,
pre-approval
that's-
from Rocket Mortgage online in 5
Which
minutes.
is shit anyways.
Yes.
Yeah. Yeah, no, I've always wondered the same thing.
Yeah.
I mean, what's the difference between pre-qual and pre-approval? I mean, literally, it's just a word.
Yeah.
And that's the fault of the mortgage industry because so many times they've failed. And so that's why somebody can make that comment, I don't give a shit what you got. And that is why cash is king.
I mean, I also think that you can have do you have agents that tell you to call the listing agent?
Yep.
Yeah. So that's another effective thing that maybe I would just want to talk to the lender and, and I'll tell when I'm making a pitch for a buyer, that's using Bill. I'm like, I've worked with Bill for 17 years. He's never let me down. He's closed every single deal because sometimes they don't know who he is. I'm like, he's done all my stuff. And so that kind of credibility is really important to me. But so you'll call the listing agent and just say this person is
Which
good
is
to go.
totally fair because we're all now a team, listing agent, buyer's agent, attorney, mortgage dude, whatever. We're all working towards the same goal. So I think it makes sense to communicate with the other side or whatever you want to call it.
Yep.
And to provide that sense of comfort that the listing agent knows that you just don't have a bumbling idiot on the other side that doesn't know what they're doing.
Yeah. There's plenty of those,
fair.
by the way, which
Yeah.
is why you need to use Bill Payne.
Yeah. And
Thank
stop
you.
calling Stacy to try to get her business.
Yeah, stop.
Yeah. Stop.
No, you cannot present at our sales meeting.
No.
Only Bill.
No. And Bill knows not to bring our office donuts.
No. We don't want carbs.
cake or
Do we look like
cookies.
we eat carbs?
Did I choose right? I
You
was like
did.
alcohol or plants?
Oh my
Which one should I
God.
do?
He
Plants.
brought us these
We're too
beautiful
old for
little
alcohol now.
succulent thingies that
Yeah.
the girls were swooning over.
Yes.
You
They
nailed
swooned.
it.
They swooned.
They swooned.
Anyway, all right. What else do you have for Bill? Okay,
That's it.
and what else did we talk about in the meeting? I feel like we hit on a couple other things, or maybe the girls had some questions.
Yeah.
No?
Yeah. I think we're good.
What else do you want to cover? FAQs, things that frequently asked questions, things that you're hammered with on a daily basis that you just want to get out there. Stop asking me.
No. I think we hit it. I
Okay.
mean, it's in this very currently. It's like what's happening in the world, what's happening with real estate. Everybody's a little nervous. I think it's a result of what we just went through. Everybody's a little more nervous because of. I mean, who the hell in our lifetime thought we would go through a fucking pandemic?
Right.
So everybody's a little on edge. So they react a little faster, a little less calm. So, it's just what I try to do, and I know you two do, is just, hey, let's be chill. Let's be cool. We're going to get through this. And I feel like we're not saving lives with what we do, but purchasing a home is a pretty big deal for an individual, and coaching them through it, understanding they have reactions and feelings. That's really that's part of the job that I think a lot of people miss, and why you two succeed and are so successful, because you understand that point.
Same to you, Bill. Aw. Well, thank you so much for coming on. We appreciate everything that you do to make us look good. You and your team are incredible. Shout out to Robin, too. And your wife, Amy, your brand manager.
She dresses me every morning.
Amazing.
Anyway, thanks so much for coming on. And we will have Bill back on periodically whenever there's some kind of shift or change, just to kind of calm us all down and tell us what's going on. So if you are curious about either getting a mortgage or refinancing, Bill is your go-to guy. You will have a fantastic customer service experience. And the reason he has been my guy for 17 years is because he has never let me down. Not one time has he let me down. All right. So thank you so much for tuning in. Don't forget to rate, review, and subscribe and share with all of your friends. We hope that you have learned a lot, and tune in next time.